So today we're going to talk about Boohoo and if Boohoo stock is a buy. I asked you guys on the weekend, did a bit of a post saying what videos you want to see, and the highest voted one was a video on Boohoo, so we're going to do that one today. There's also some other good suggestions. I think one was like a video on Tattoo Chef and Beyond Me, one on Alibaba, one on my background of history of investing, but this is the one that got the highest votes. But what I'll do is I'll turn it over to you guys once again in the comment section. Post what you'd like, what stock you'd like, or what in particular you'd like me to talk about, and the one that gets the highest votes, maybe I'll do a video on that one. So get voting in the comments and we'll take a look. But today we'll get stuck onto Boohoo. And I think it's only fair at the start of the video that I do make it clear that I do own shares in Boohoo, so I am going to be probably a little bit biased and bullish on this stock, but we'll have a look and see if it's a buy. So Boohoo is an online fashion retailer. It was founded in 2006 and it's currently trading at 92p. At the moment it is up 24% in the last month, which is pretty good going. But if you do look on a longer term basis, since the start of 2021, the stock is down 74%. That is a major drop. For a company to lose 74% of its value is a lot, especially for a company that is profitable as well. And it is now trading down at a 1.7 billion market cap. And that valuation actually pushes it down now to a price that it has not been since September 2016. So yeah, it's had nearly 6 years of share price appreciation wiped off this company, which is a lot. And now that's put it down at 19 times earnings as well at the moment. So I think this is the big thing that everyone is interested in Boohoo, is looking at this stock and going, okay, you know, this stock at its peak was a £4 stock and now it's a 92p. There must be something significantly wrong with this company now, or this is a major buying opportunity. So that's what we're going to be looking at today. So the company originally started off as just the Boohoo brand. Since then it has expanded and I think it owns something like 14 different brands now. Some of its most recent acquisitions is in 2019. It bought the online business of Karen Millen. It also bought Coast, and in 2020 it also bought the brands which was Oasis and Warehouse. And one of the most recent acquisitions that it's made is it has bought in 2021, it has bought the department store Debenhams and taken that online. And I think the acquisition of Debenhams is very important as well, because this is also going to expand them from just being a fashion retail brand to actually moving into the makeup industry as well, which is a massive industry to expand in. It also has acquired Burton's, Wallace and Dorothy Perkins as well. And in December 2021 it also announced the expansion into new regions, with the regions being Japan, Korea, Singapore, Hong Kong and Taiwan as well. So I think the big thing that is important to say about Boohoo is that this used to be a brand that was focused on 16 to 30 year olds, is now, you know, expanding past the 16 to, you know, every single age range. And as well with some of the brands that it's acquiring recently, some of these brands as well are a bit more of the higher end brands as well. So with higher end brands, and this is what Boohoo, the unique thing about Boohoo is that it owns all of its own brands. So if you own your own brands, you have the pricing power, and also that normally leads to having better margins than a other company that is selling other retailer brands through their site. So something like an ASOS, for example. So that's a good thing that what Boohoo own. They're expanding their age range as well, and hopefully these age range expansions would lead to better margins and also expanding into the makeup range. So the story looks quite good for Boohoo with the acquisitions that they made further down the line and their expansion. So I guess, why is this dropping so much? You look at the share price, why is this down so much? Well, at the moment there's been no drop in revenue, so the revenue is still going up. It's going up a little bit slower than what it did previously. A lot of that is because of tough comparisons. So it had a massive jump in 2020 because of the CV situation. So this year it hasn't grown as quick, but it's still grown in the right direction. But it has had a lot of demand pulled forward, so it has had hard comps. And the big thing is that the profit's been hit. The reason why the profit is being hit is because products are being returned a lot more. Previously, a lot of products were not being returned as much in the previous year because generally people did not want to go out as much and interact with people. And also logistic costs, I'm sure you're aware of, has hit nearly every single company. Logistic costs hurt them a fair amount as well. And when you're sending a lot of parcels, that's obviously going to hurt you. So you've probably seen that's hit a lot of companies when you look at the logistics side of it by at least a couple of percent. And Boohoo is exactly the same. It has hit their profit margin by over 3%, and that is the cause of the drop. But underneath the company is still growing massively in the right way through a revenue point of view. Now, if you do look at the past growth of the company, you can see how exceptional this has been. I mean, you got to remember the share price is nearly back at 2016 when this company was doing 195 million and 12 million profit. Now it's doing 1.9 billion in revenue and 59 million in profit, and that's with the impacted profit margins due to the logistic issues, which if you think is short term, that could be generally a lot higher. But you can see this company has a history of really growing that profit and revenue, which is really good. Now going forward, the revenue growth is still going to be strong. There's a lot of arguments what this rate is going to be. Is it going to be single digit range? Is it going to be low double digit range? Is it going to be 20 plus revenue growth? There's a lot of debate on what the future revenue growth is, but historically this has grown 30%. Profit wise, it is expected that the profit margins do start coming back and they do go back to putting major amounts of growth in. And once again, there's a lot of debate about what that is going to be. Are these logistic issues short term or the long term, and is this going to go back to putting good amounts of profit growth in? I'll leave that for you to decide. I'll give my view at the end in a second. Financial health wise, this company is very strong. It's got only a short amount of debt there, which is about 50 million, but the debt to equity is really strong. And it does currently still have 148 million in cash, which is a very strong cash balance for a 1.1 billion market cap company. Now you've got to remember as well that cash balance has been burnt through a little bit because, as we said at the start of the video, they have been making major acquisitions to boost the company with Karen Million and Coast, which were for 18 million, Oasis, which was for 5 million, and Warehouse as well. And then there was Debenhams bought for 55 million, and Burton Wallace, Dorothy Perkins for 25 million. So you got to remember that even though this company has made loads of acquisitions recently and burnt through that cash, it's still very strong in cash. And this is the thing, is that because this company has for so long produced being so profitable, a lot of that does end up going to the balance sheet, and that has led to the acquisitions, which is really good from the company's point of view. From an ownership point of view, there has been a couple of insiders inside the company buying, not as much as what you would hope for a company that has dropped this much, but no selling, which is definitely positive. And inside the company, you can see here that the co-founder, Mahmood Kamani, is currently owning 16% of the company as well, which is really good to see a founder-led company that has the founder holding 16% in the company. And according to Simply Wall Street, they have it down as 50% undervalued. Now, if you do want to sign up to Simply Wall Street, I do have a link in the description if you do want to use this platform that I use in my videos all the time. So you can see here the stock price has dipped an absolutely huge amount, but the growth on the revenue is still stronger than ever, and the balance sheet is strong. And you've just got to look from this point of view is down to the profit side of it. Do you believe that the profit here is here to stay and is going to stay down at these lower kind of 3% profit margins? Or in the longer term, do you believe that these logistic issues will calm down or prices will increase and Boohoo will pass that on to customers and Boohoo will go back to doing 5 to 6% profit margins? That is the $1 million question here. But at the moment, it is priced in that Boohoo is going to grow at roughly single digit 10% revenue rate, and also the profit margins are going to stay down here at compressed values. Now, in my opinion, these are all short term, and I expect Boohoo to go back to doing at least 4%, but more than likely 5% profit margins. And I expect Boohoo to go back to their historic revenue growth, or rather than being down this low single digit 10% revenue growth, to at least 20% revenue growth in the future. Now, what I have done is I've done a bull case and a bear case for these numbers. So what I've done here is I've done some numbers on a current market cap of 1.17 billion. I've also put no share dilution in here. Boohoo doesn't do too much share dilution, but I thought I'd make that clear. And I have done a worst case scenario. The worst case scenario is that it grows at 10% revenue growth, it has 3% profit margins, and I've done that from 2022 to 2026. I've also done a best case scenario here, and that is that they go back to 5% profit margins and they grow at the higher end of 20% revenue growth through 2022 to 2026. Now, working on my numbers, that it trades down at around about a 20 to 40 PE ratio. That will give me somewhere between, in the next 5 years, 71% to 242% upside in this company in the next 5 years. So even worst case scenario, 71% would still be not too bad. Obviously, it won't be amazing. Probably underperform the indexes, but still 71% isn't too bad. Worst case scenario on the higher end, 242%, which would still be a very good return from here. Now, the best case scenario would give me somewhere between a 341% return to 782%. Now, obviously, the chances of getting that return are a little bit slim. Obviously, that would need everything to fall in line, trading at a higher valuation, profit margins to go back to really high, revenue growth to be strong. So that is to take into consideration there, but that would be best case scenario. So in this company right now, I do see somewhere between, if I was to play it safe, if I take the higher number on the worst case scenario and the lower number on the best case scenario, there would be somewhere between, I would say, 300% return on this company at least. And that's what I believe. I generally do believe that on this stock at the moment, I would get in the next 5 years at least a 3x return from here. But if the numbers are what I believe they can do, I think it could be even higher. So right now, looking at Boohoo, I think the growth story ahead, when they introduce a lot of these new brands that they've acquired, the growth comes back to a bit more higher growth and the profit margins do recover. I think this company can easily put in a 3x return in the next 5 years. So is Boohoo stock a buy? In my opinion, yes it is, and that's why I currently own shares, and I will carry on buying shares down at these levels right now. And I think when Wall Street wakes up, when they kind of realize that these issues are short term, I see this stock doing very well. So I am a fan of Boohoo, as most of you guys probably know. So I hope you enjoyed the video. Let me know in the comment section what stock you want me to do next, and I'll see you on the next video.